how do you know it's the right time to refinance your mortgage? Refinancing your mortgage, everyone, you're going to hear from the media and everything that says like rates are coming down, they're going up. And the reality is when you're looking at refinancing your mortgage, no one can time the market perfectly. No one can predict the market. If we knew how to predict the market, what was going to happen with stocks and the US economy, we'd be making millions on Wall Street. Obviously, that's not us, right? Unfortunately. So when you're looking at a refinance, it all comes down to a break-even analysis. So we want to look at your current mortgage versus where you can refinance to. And if there's enough savings there, you want to move forward. You don't want to try to time the market. Anyone that tries to time the market is probably going to lose. So just look at current market versus where you are. And if that cost-benefit analysis makes sense, you probably should consider refinancing. To get the cost-benefit analysis, reach out to myself and my team and we'll assist you with that. All right, so you're thinking about refinancing. What information do you need to do a refinance of your mortgage? The first thing is having all of your current terms on your current mortgage available. It's very important that we know your outstanding loan balance, your current interest rate, how much you have left on your loan from a term perspective, and also an estimate on what your home's value is worth. All of that plays a big role into figuring out estimates on your refinance. That's information that we need to have. We certainly can help you find some of it. We go online to different websites to find a value of your home as well that's conservative, but those are the main things that you'll need to initiate the process of getting a quote to refinance your mortgage. One of the most popular questions on a refinance is very simple. What the heck is it going to cost us? And that's a very fair question. So on a refinance, there are closing costs. Closing costs can range somewhere from $3,000 to $5,000, and then there's escrows as well. But the escrows will always wash because your old mortgage and escrow account will wash over to the new one. So that will kind of take care of itself. But there are some closing costs that are involved. But the nice thing about the refinance is the closing costs can be rolled into the new mortgage. So, say for example, if you're saving $300 a month, and your closing costs are $5,000 and you elect to roll that into the new mortgage loan, instead of saving, $300 a month, maybe you only save $270 a month by rolling that cost into the new loan. You're not allowed to do this on a purchase loan. So that is one benefit of a refinance. You really can do a refinance with very little to no money out of pocket, depending on if you need a new appraisal or not. What verifications have to be done on a mortgage to qualify you in underwriting, and what documents do you need? So when we're doing a refinance, it's a whole new mortgage. So most likely we will need a new credit report. We will have to re-verify your work history and get pay stubs and W-2 statements. So there are some documents as a part of the refinance, and we do have to confirm that you still qualify for that loan. And the main things we're looking at are the credit report and the income documents. Once you provide those to us, we can also confirm that you obviously qualify to move forward with the new loan. What types of refinances are there? There's a bunch of different types of refinances. So there's what's called a rate and term. That's where you're just lowering your rate or lowering the term of the repayment of the loan. There's also what's called a cash out refinance, where you could potentially lower your rate and tap into your home's equity and get cash at closing. You get paid to refinance. So if you have home repairs or if you want to consolidate some high interest debt, a cash out refinance can be a great option. For those of you that have FHA loans or VA loans, there's what's called streamlines for FHA and what's called an interest rate reduction loan, also known as an IRRRL, for veterans that have VA loans. Those are very awesome loan programs where a lot of times we don't need a new appraisal and we don't have to re-verify your income, but those are limited to FHA and VA loans. On conventional loans, we still have to re-verify everything, but there's a lot of different refinances available. So, reach out to us so we can connect with you to see which one is right for you. Maybe a cash out could make great sense to consolidate some high interest credit card debt, or maybe we can just do a simple rate and term where we're lowering your rate, or maybe we're taking you from a 30-year fix to a 15-year term as well. All right, so you decided to refinance. Now the question is, what the heck are you going to do with all the extra money you've saved by refinancing? Whether you've saved $150 a month or $1,000 a month, you can get very strategic with how you plan and strategize on your mortgage debt. One of the best things that you can do is if you refinance and say you save $300 a month or $200 a month, if you keep making the same monthly mortgage payment that you did before refinancing and you applied that extra $200 to $300 savings to your principal, you could shave off hundreds of thousands of dollars in finance charge by paying your loan off early. So one of the things we'll want to strategize on is how can we get this mortgage debt paid off as soon as possible and save a lot of interest charged to you. Another thing that you could do is take that 2 to 3 or 5 or whatever savings per month, roll it into an investment account where you can bank returns. So, once we have the savings figured out, the next step is also being strategic with how are we going to use those savings to make that money work for you.